In the following, remember that the Federal Reserve is the main regulator of the big banks. The Fed is also not part of the government, it is owned by those same banks. This is something they all missed.
Now the banks, having received approval or exemption for whatever they wish to do, seek to control non-financial infrastructures all over the world. They've already taken control of ports, airports, electric utilities, water utilities, sewer utilities, wind power farms, parking meters, solar power generation, parking garages, rail leasing, charter schools, and more.
Probably at some point in the future, we will find ourselves in a situation where we, not only do we buy our house with the money borrowed from a big bank, not only that house was built maybe by a subsidiary of that big bank, it's heated and electrified and provided with water that is also distributed and perhaps produced by that same bank, and who knows what else. In fact, this is a hyperbolic hypothetical, of course. Being a law professor, I can't resist that. But, one could envision JP Morgan's new slogan is, get everything you need from your friendly, local, global financial conglomerate.
Monopoly control.
As they describe.
As you described, they're describing.
Correct.
Because they will have monopoly.
That's correct.
So, financial conglomerates are monopolistic. They also exert control through ownership and interlocking directorships.
It's been a veritable American tradition to view large aggregations of economic and financial power in the hands of a few money trusts with great suspicion and fear of this power translating into political influence. If the same institutions that control the flow of credit throughout the economy also control the flow of raw materials, these fears are greatly exacerbated.
There was a very accurate report on this from the Federal Institute of Technology in Zurich, Switzerland. 3 mathematicians looked at accurate corporate data on 43,000 transnational companies, and they reported that through very clever interlocking corporate directors, these groups managed to grab 10 times the power than they otherwise had in their finances.
But Goldman Sachs has the full right under the law as written to appoint all directors on the board of directors of that company. They can engage in extensive consultations with the managers of Metro International with respect to the business. And it's very hard to tell how much of informal influence Goldman Sachs, for example, exerts over Metro International's management decisions.
2 managing directors of Goldman Sachs serve on Kinder's board of directors, owning a 19% stake in the company. So that, I think, that's another place where the Fed should look a little more carefully, we think.
Now for the so-called competitive advantage held by banks. Can you borrow money at 0.75%? Neither can anyone else, except the banks, of course, who can borrow from the Federal Reserve discount window.
When you have institutions that have access to the Fed window, and that may well be the basis of their cheaper financing, it's anti-competitive. It prevents Wall Street, and I'm talking about investors, I'm talking about where price discovery happens, where people buy and sell securities trying to bring price and value in line. You're distorting the ability of markets to function.
The financial industry often asserts that banks enter into commercial sectors provides public benefits by increasing competition and by enabling them to provide better, more efficient services to their clients. What these claims leave out, however, is the potential competitive advantage that the federal subsidy of banking institutions gives them when they act in commodity markets.
What I see now in the mixing of commerce and banking is the dawn of a new gilded age, where the fruits of all are enjoyed by a few, where competition in the real economy is stifled by the advantages bestowed by a generous Federal Reserve.
But they all missed something. The Federal Reserve is no more federal than Federal Express. It is owned by the banks themselves. This is the final piece in the puzzle. The Fed is funding a systemic supranational takeover.
This means that the central banks for the world are issuing paper money with absolutely no accountability to the people who are using this money. And pretty soon, in a matter of weeks probably, the whole system is going to come to a screeching halt with something called gold backwardation.
Gold backwardation? Go ahead, look that one up. But the Fed does not answer to Congress.
We don't even know what the regulators seem to be doing. There's no easy way for Senator Merkley or Senator Warren or me or Senator Toomey, any of us, to learn about practices that these banks are undertaking, or the process, even the process, most egregiously in my mind, by which the Federal Reserve reviews and approves these activities.
How specifically does the Fed arrive at its conclusions, for example, that a particular type of an investment or activity is in fact consistent with the public interest? And again, this is a very important inquiry.
Well, and we've asked those questions. We've not asked them in a public forum. They've been less than forthcoming. We will do a hearing probably in September, and I hope it's before the deadline, but we don't know when the deadline is because they won't tell us when the deadline is. Goldman Sachs apparently also holds its Metro warehouse system under this provision. They elect to do so using a Federal Reserve form that is not necessarily available to the public. So the Fed, again, has not been forthcoming in showing us this form, discussing the deadline.
Congress has the power to rein in the Federal Reserve. Congress has the power to protect industry in the biggest and potentially best economy in the world, and to stand up for ordinary Americans who pay more for aluminum and gasoline simply because banks and investment banks take a cut. Or else we're destined to view 2008 as the first financial crisis and not the worst.
Please ask your congressman to get involved, to try to understand the issues behind the mega banks owning infrastructure through interlocking directorships, the potential for price manipulation, and the failure of the regulators. The Federal Reserve does not even answer many of Congress's questions. Banks themselves own the Federal Reserve. Is it any surprise that the banks are allowed to behave in this way? You know, turkeys don't vote for Thanksgiving. When you see that trading is done, not by consent, but by compulsion. When you see that in order to produce, you need to obtain permission from men who produce nothing. When you see that money is flowing to those who deal, not in goods, but in favors. When you see that men get richer by graft and by pull than by work, and your laws don't protect you against them, but protect them against you. When you see corruption being rewarded and honesty becoming a self-sacrifice. You may know that your society is doomed.